G'day. I wanted to go through the Australian tax system just to give a bit of an idea of what our system looks like and on the income that we make each year, how we tax on that money. So it is a scaled system, so the more we earn, the more we pay. So I'll just go through the system for you to give a bit of an idea on the tax that we pay. So between $0 and $18,200 each year, you will pay zero tax on that. Then as you go up from $18,200 up to $37,000, we're going to run out of room, so I'll go for the K's. That's where you're going to pay 21%. Now that includes the Medicare levy of 2%, which has just increased recently. From $37,000 up to $80,000, that's when you get another jump, and with the Medicare levy again goes to 34.5%. 180 up to $180,000, again you get another rate hike in terms of the percentage tax that you pay. It goes to $39,000, and then from $180,000 and above it'll go up to 47%, so pretty big jump from there to there. So obviously the more you earn, the more you pay, the higher tax rate that you pay, and the way that, when you go to your accountant, I think it's important to know the way the information and the way they provide that information to you is important as well. So if you're earning, say, $85,000 per year, as you can see, you've covered off a fair amount of the tax brackets. So you've got $5,000 in that 80 to 180 mark, and that means that you're going to have $5,000 that's taxed at 39%. So when we calculate that out without any real tax planning at all, that's where it's just over $21,000, $21,097. So the way that the accountants, and quite rightly so, will explain this to you, they'll give you an average over the whole, your whole income. So that average is around, and I've written it down there, is 24.82%. So that's your average, but obviously we know that on some of this money that you've earned, you're paying zero, and on $5,000 above 80, you're paying 39%. So for me personally, when we're looking at tax reduction strategies, I like to know what is the highest marginal tax rate that someone's got, and in this case we know we've got $5,000 that's been taxed at 39%. So if we say that we'd like to reduce save a bit of tax, and we say, well, our highest marginal tax rate is 39, and we've got $5,000 that's been taxed in that bracket, let's contribute $5,000 into superannuation. So if we put that $5,000 into super, that's going to be taxed at 15% instead of the 39%. So less the 15, that'll give us a saving of 24% each year. So that will have a dramatic effect on your average tax. But yeah, when it comes to assessment and tax planning, I always like to look at what the highest marginal tax rate is based on the Australian tax system. So I hope that was a bit of a help and a bit of an insight to how we assess people's tax, both from an accountancy point of view, but then from a tax saving and tax planning point of view.